How George Soros turns crisis into profit. Most investors run from uncertainty. George Soros runs toward it. Where others see crisis, he sees opportunity. Not because he's reckless, but because he understands the forces that trigger collapse. And he positions before anyone else believes collapse is possible. In this video, we'll unpack how Soros turns global chaos into calculated opportunity and why most investors miss what he sees. As an experienced investor, I used to avoid volatile environments. But the more I studied Soros, the more I understood. The greatest trades are born from discomfort. Quick thing before we get started, if you're new here, hit like and subscribe. It helps the channel and keeps you in the loop. Reflexivity, the foundation of Soros' strategy. Soros doesn't see markets as efficient. He sees them as flawed, self-reinforcing systems. In his worldview, perception influences reality. When investors believe something strongly enough, they make it true until it isn't. That loop of belief in price action? Soros trades it. Reflexivity taught me to stop treating markets like math and start seeing them like psychology. Betting against institutions. In 1992, Soros famously broke the Bank of England. He saw the unsustainable peg between the pound and the Deutsche Mark. Britain couldn't hold it, but politicians insisted they would. That disconnect between narrative and reality created a gap wide enough for a billion-dollar profit. And Soros took it. I used to assume governments could control markets. Soros taught me, even empires have blind spots. Embracing asymmetry. Soros looks for asymmetric bets, where the downside is limited but the upside uncapped. When volatility rises, most investors shrink. Soros sizes into chaos. I've learned to scan for those trades. Small risk, massive reward, even if the odds are lower. That's not gambling. That's geometry. Moving before the crowd. Soros doesn't react to market consensus. He positions ahead of it. By the time others agree with his view, he's already in. It's not prediction, it's preparation. I used to wait for confirmation. Now I build small exposure before the story becomes obvious. Because obvious is often too late. Understanding pain and conviction. Soros once said he doubts every position he holds. That doesn't make him weak, it makes him sharp. He sizes up when the market confirms, cuts quickly when it doesn't. His approach taught me a paradox. True conviction doesn't mean holding forever. It means acting with size only when the market agrees. Trading crisis narratives. Soros doesn't just trade chart, she trades crisis stories. Whether it's emerging market debt, currency contagion, or sovereign default studies, the political, the psychological, the narrative. That taught me numbers don't drive, market stories do. Especially during panic. From macro to micro timing. Soros may have big ideas, but he acts with surgical precision. He waits, watches, then strikes. That blend of macro thesis and micro entry is rare, but when it works, it's unstoppable. I've learned to think globally, but execute locally. Idea in the clouds, finger on the trigger. What you can learn from Soros. You don't have to short currencies. You don't need to challenge central banks. But you can learn to spot fragile narratives. Embrace calculated asymmetry. Enter before consensus. Let story shape strategy. Crisis is coming, always. The question is, will you freeze her? Will you be ready? George Soros doesn't trade events. He trades the gap between belief and reality. If this helped you think deeper about volatility, don't panic share it. Like, subscribe, send this to someone who's afraid of risk. Because the best opportunities are hiding inside the stories no one wants to believe.